start a Telegram recording, and then we can get the show on the road. Cool. Good afternoon, Whale Coin Talk community. My name is Noah. I'm here today with Fractal Protocol. Representing their team is Kelvin and Elliot. And Kelvin, before we give this a start, give us a quick background of who you are and how you found yourself working in the crypto industry.
Sure. So yeah, I'm the project lead for Fractal. Happy to be here. Thanks for having me. Prior to starting Fractal, I ran a portfolio of DeFi strategies for a fund called Ledger Prime. Prior to that, I was the co-founder of a venture-backed machine learning startup that built text summarization models, and before that, I got a master's in computational finance from Stanford. How did I find myself going down the crypto rabbit hole? I think what really got me, aside from Bitcoin, which was interesting but not very useful, was really the idea that you could make any asset tradable, liquid, and completely permissionless 24/7. If you think about Robinhood or Revolut or all of those fintech apps, while they do make fintech more user-friendly, they're still running on the same pipes. You can't send money to your friend on a Saturday, let alone send it across borders cheaply. So yeah, and also if you think about loans, today you can get a loan against your house, but that's about it. You can't really, there's no technological reason why you couldn't be able to, I don't know, resell your frequent flyer membership or your in-game assets, etc. So idea of liquidity for every asset 24/7 is what got me.
So in short, the current system is broken, and the industry that we're working in is going to be a huge paradigm shifter for the way that we interface with finance, money, and everything in between today.
Exactly.
So Kelvin, give us a high-level overview of what Fractal Protocol is and how it works.
Sure. So I'll tell you a little bit of what got us here in the first place. So if you look at DeFi today, and managing a book of several millions of dollars, interacting with this all day made me realize that, one, if I was doing it, it was definitely a full-time job. While DeFi was all about just depositing money on SushiSwap and forgetting about it 2 years ago, you can't really do that anymore. Now you put your money in Curve, you take the receipt token, you put it in Convex, and you take that and you collateralize it for something else, et cetera, et cetera. And the strategies are just getting more complex. If you provide liquidity to Lira on Optimism, you're effectively acting as an options market maker, so you have nonlinear risks, and it's just becoming more and more professional. The second one is that yields are super volatile. The whole idea of token inflation means that things are reflexive on the way up. So when things go well, token goes up, yields go up, and people are happy. But at some point, it comes back down, and that cycle is never really healthy. And they're also very opaque, right? Like if even on Curve, if you have a 25 bips entry and exit fee, it's really non-insignificant if your position is just going to make you 8, 9, or 10%. So you really have to be careful. And so the final piece was that was after we started, but I think is a great opportunity for us, is that CeFi has really shown its limits in crypto over the past couple of months. It's pretty clear that if Voyager or Celsius's balance sheet had been completely transparent and auditable, you would have been able to see that they had such a great counterparty risk to funds like Three Arrows, and so that's why we came in. And so at a high level, we're building a protocol to abstract all of that behind a simple yield account that gives you a receipt token that you can reuse across the space. We don't believe that people fundamentally care about what chain they're on. They care about functionality and yield and ease of use. And so we set out to build a fully transparent, auditable yield account that people can deposit into and forget about.
Right on. And you went ahead and highlighted some of DeFi's complexity problems and proposed at a high level how Fractal provides a solution. But I'm curious to know more specifically how you guys are solving the issues of liquidity fragmentation, and also what is a cross-collateralized DeFi hub? What does that mean?
Sure. So we're not really solving the issue of liquidity fragmentation. We've just built the technology to route liquidity where it's most rewarded, so that the user doesn't have to. As a user in Fractal, you deposit your USDC, you get our receipt token USDF, and that's it. And then everything gets handled behind the scenes. The idea of cross-collateralized DeFi, if you ask any institution that interfaces with DeFi, and also CeFi for that matter, one of the biggest problems is that you can't cross-collateralize. By that I mean that if you're long something on Binance and if you're short something on FTX at the same time, if you're long and short the very same asset, in theory your exposure is zero, but in reality you have to have money on FTX and money on Binance to cover each position. And DeFi kind of gives us the opportunity to put that under one roof if you standardize the technology and you're able to, for example, provide liquidity on Convex and then use that as collateral to borrow USDC to short some asset, for example.
And currently, the only stablecoin that you guys are accepting is USDC. Why did you start with USDC, and do you plan on expanding to other stablecoins?
We started by USDC because it's the market leader, and we wanted to also, to take the largest common denominator between institutions, retail, and whales in the space. We do plan on accepting other stablecoins, but it will probably be via a zapping function. The reason for that is, actually, would welcome people's feedback if they have any, but we don't want to have individual vaults that are broken up, because if you end up with a receipt token for USDC for the USDC vault and a different receipt token for the USDT or Frax vault, you can't really promote composability as well. It's the same thing for staked ETH, for example. They only have one version, and then you can reuse it across the space. So trying to focus on the composability and limit the complexity, really.
And how are you guys sustaining a fixed yield? Where is the yield coming from?
Sure. So I'll describe what happens when you deposit in Fractal. So you deposit in Fractal, the money goes into our first smart contract. It's called the master vault. We keep 10% of your deposit there just to ensure that there's enough of a buffer for people to deposit and withdraw, similar to what Yearn does or other similar protocols. And then the rest goes into our yield reserve. And then from there, it's bridged across different chains, or stays on Ethereum and deployed on various yield strategies. The strategies that we're using are basically the blue chips. If you think about DeFi, most of DeFi's TVL is contained in about 8 contracts. You have UniV2 and UniV3, Aave, Compound, Convex, and Curve, and then all of their respective forks. But we've built the strategy contracts to integrate and adapt to most of those, and that enables us to cover most of DeFi. And then how do we make the yield fixed? Basically, the yield reserve in the middle acts as a buffer. So when the times are good and we generate more than we need to pay out to depositors, then we fill up the yield reserve. And when the times are bad and we are not generating enough, then we pump into the yield reserve to sustain the yield. And obviously, if the environment changes significantly, then we adjust the APR up or down. But we wanted to provide some clarity and predictability to what you're going to get.
And what's the APR currently?
Currently, it's 7%. It's about to go up to 8% because we've been doing reasonably well over the past month.
And what's your TVL?
So we did a guarded launch up until last week. We have 1 million TVL. We did a guarded launch until last week with just early adopters while we were waiting for our second audit to come back. It's due to come back tomorrow or Wednesday. We've already got the draft, so we already increased the capacity and we feel comfortable with our code, but wanted to be extra careful.
What's a guarded launch?
So we only enabled, we set the maximum TVL at 1 million, so that that was the maximum people could deposit, and because we didn't want to have too much money at risk while we were still going through the audit process.
And which firm did you guys complete your first audit with, and which one are you completing your second one with?
Yeah, so first audit was with a firm called Zelic, and the second one is with QuantStamp.
You mentioned the yield reserve. Is that just strictly sitting in USDC?
Yes, we might use it for super safe things in the future, but for now, we're not really concerned with juicing it. It's important that we keep a safe system, and I think DeFi and its risks have been pretty apparent over the past couple of weeks. So we're trying to be, we're not trying to generate 25%. We're trying to get something that people are comfortable with, and the yield reserve is the last thing we want to speculate with.
Certainly, and I think that even 8-9% is still incredible on your dollars. No disagreements there. You mentioned that you were using a bulk of the deposited USDC and deploying various yield farming strategies, if I'm not mistaken. Is there any way for us to go and see how exactly you guys are deploying this capital and which strategies you're specifically using?
Yeah, absolutely. We actually are about to announce this, so I'll announce it here. But if you go to our website on fractalprotocol.org, you can click through to a transparency dashboard, which we just finished building, which gives you everything and tells you where every single dollar is of the TVL. So you can see the strategies that are being employed. You can see the pending rewards to be harvested. You can see the accounting metrics. So we have total assets, total liabilities. We want our assets to be greater than our liabilities. You can see the value of the treasury and the APR.
Kelvin, do you want to give us some more insight into the core Fractal components?
Sure. So I described a few earlier, but so first piece and the only piece that is exposed to the user is the master vault. So you go to our web app, you deposit your USDC, and you get our receipt token called USDF in exchange. Then money gets routed to the yield reserve, the core contract of the system. And from there, so we've built an integration on top of Lee Finance, which is a bridge aggregator that then enables us to be super specific about the bridges we use and bridging to other chains. And then the final step is, so we send that money to other chains, or we keep it to Ethereum mainnet. But in the case where we send it to other chains, we have individual vaults, again, they're really just internal vaults that receive those assets and deploy them into the strategies that I described previously.
Got it. And is there any other purpose or function of USDF apart from being a token that you ultimately use to redeem the USDC that you initially deposited?
So we're early. So right now there isn't, but it's our immediate next focus, which is going to be composability. So if anybody in the audience is working for other DeFi protocols, we'd love to work with you. And using it as collateral so you can borrow against it, using it as the underlying for decentralized option vaults, for example, sell puts, or having people just build on top of it and use it as a source of base yield that they build strategies on top of, is really what we're looking for.
And I read in the doc that it's I read the term composable yield primitive. What does that mean in this context?
Yeah, so I think it's USDF. It's turning USDF in a similar way that Compound have C tokens that are then so notional finance builds on top of C tokens, and so that makes the C token a composable primitive. Our hope is to make USDF widely used across the space. If you think about it, like the end game would be, why would you, if you really trust Fractal, why would you ever hold USDC if you can just hold USDF instead and do whatever you're doing in DeFi with USDF as the base currency, which ensures you to be making some base yield, whatever you do.
So kind of a system where, for example, I'm using this as an analogy where I plug in my USDC into Curve, I get Curve pool tokens, right? I plug a crypto asset into Curve, I get Curve pool tokens, and then I go and take them and I plug them into Convex. You want USDF to be something that is used across a multitude of DeFi protocols.
Exactly.
Are you guys planning on allowing borrowing and lending at any point directly from Fractal?
Yeah, that's something that's clearly on the roadmap. Especially, so we talked about opening it up to other stablecoins. One thing that we have been doing user research on is a Bitcoin vault, which would enable you to deposit your Bitcoins and borrow stablecoins against it. So we're still in the research phase of that, but expect some more news soon.
Is there a reason that Fractal is currently not available in the US?
Yeah, that's coming from an abundance of caution. There's a lot of regulatory uncertainty around accessibility in the US, and so we've been advised by lawyers to steer clear of that for now, unfortunately.
Kelvin, have you guys ever thought about implementing some sort of an insurance policy? I remember way back looking at, I forget, it was a DeFi protocol that offers insurance in case there's a hack or something of that sort.
Yeah, absolutely. Again, that's another thing that we need to reach a little bit more maturity to launch, but especially so QuantStamp recently launched an insurance business, and so we're investigating different options. It all comes down to the premium you're willing to pay and whether you actually trust the insurer. Because if you make 7 or 8%, but you're paying 4% of that in insurance, and you don't even have the guarantee that if really things go wrong, that the insurance provider will have enough liquidity to back you up. It's really the question I have right now, but I would love to be able to make this even safer.
What chains can I use? What chains can I currently use Fractal on?
So right now you can only you can interface with Fractal only on Ethereum, and then we go to multiple chains. The immediate next thing on our roadmap is deposit from anywhere and withdraw from anywhere. So it's deploying our master vault on other EVM chains, such that you can deposit on ETH, get your receipt token, bridge that receipt token to Avalanche, and then when you're done doing whatever you wanted to do with it on Avalanche, you can just redeem directly on Avalanche. But it's a work in progress.
Circling back to strategies, can you explain the difference between an abstract strategy and a quant strategy?
Yeah, so actually that's somewhere where we need to update our docs. We've abstract strategies were the template strategies for the contract I described previously. So UniV2, UniV3, Convex, Curve, etc. Quant strategies, we had initially considered the idea of appointing quantitative strategy managers that would manage a pocket of capital. We've pressed the pause button on that for now because we wanted to stay on the safer side, and kind of not aim for yields that are too high because it would imply too much risk. And in this environment, we're really just trying to be safe.
Tell us about your partnership with Live Finance and why you chose them as your bridge relayer.
Sure. So when we looked at bridges, the main problem was that even within the EVM world, you have a lot of providers and they have different liquidity levels. Some of them are more or less liquid to bridge to certain chains. And then the integration cost to build the integration with all of them is very high. And so we decided to partner with Live Finance because they really abstract that away from us. It's a single integration. Our business is to generate yield for our depositors, and then their business is to bridge assets in a safe way. And so they can focus on that. It means we only integrate with one partner, and then they allow a lot of customizability in terms of us not wanting to use one bridge or another that they support. So we can say we want to bridge to Avalanche, but we only want to use the native bridge, or we want to use these 3 bridges, but not these other 4. So we can apply whatever security frameworks we've developed on top of them.
So looking a bit more for your personal opinions here, but after what happened with Anchor and UST, what do you think needs to be done in order to instill trust back in the mainstream participants and encourage people that are first-time crypto enthusiasts to dip their feet into yield farming for the first time?
Yeah, so I think transparency is the key item here. And that's why we're just about to announce our transparency dashboard. It's super important for users to be able to see, it's not, they don't necessarily need to see that every day and check that every day, but at least they have the option to see where every single USDC is within our system, and know that we can get, we can be kept in check by the community. And so they can see that, if ever we had like 98% of our assets in a single strategy, they would ring the alarm bells and tell us this is not safe. So that would be the first point. And the other point is really just the expectation. Anchor, while it worked, kind of set an artificial expectation that it was safe to earn 20% on your money without having to do anything. Unfortunately, that was a little bit too ambitious. And so just resetting the expectation and taking a more conservative approach, as I hope I've made clear that we do, is also important.
What are your thoughts on algorithmic stablecoins versus a stablecoin like USDC versus a over collateralized stablecoin like MIM? I'd love to hear more of your personal opinions on those.
So algorithmic stablecoins, while I would trade them on my personal account, I don't feel comfortable putting them in Fractal for now, especially the purely algorithmic ones. I'm comfortable with Frax because effectively Frax is like 90.75% collateralized, if I'm not mistaken. So really the worst thing that can happen is a 9.25% drawdown. And as a team, they've been very risk-off, very conservative. They control 50% of their liquidity. So the liquidity at the peg is actually very good. They sustained in June when ETH went to 850. Frax maintained its peg impressively well. So I'm fairly comfortable with them, and we're working. We're looking to work closer with them. But other than that, we'll stick to fully backed or over collateralized.
What are some marketing strategies that Fractal is deploying in order to capture more users and raise your TVL?
Sure. So being here is one of them. But we don't want to do a crazy liquidity mining program where people just farm and dump the token. We're trying to be sustainable. So And again, we only just got our audit report, so we're going to start the marketing efforts now. But it's going to be, you know, podcasts, AMAs, content marketing, so writing educational content about Fractal and what we're doing, and also doing partnerships with other protocols. So you know, again, back to Frax, they frequently do partnerships with other stablecoin or quasi stablecoins, which we are. Like our receipt token is fixed and pegged to the dollar. It just increases with the yield. So partnerships with them to share some of the rewards and participate maybe in the curve war dynamic. But yeah, trying to really focus on the narrative that we're going to stay conservative, and in this market we would rather grow slowly is better than too fast and burn ourselves.
Couldn't agree more. And Kelvin, just to clarify for our audience, you guys currently do not have a native token.
We do not have a native token. We will have a native token in the future, but not for now.
Got it. And what would be the incentives or utilities behind launching your own native token?
So there will be a couple. So number one is providing an insurance pool of capital, similar to how Aave does it, in case something goes wrong. So the Fractal token will have a couple of utilities. One, it will have a claim on the treasury. So the yield reserve that we accumulate will, you know, be owned by the token holders. The second one is we will incentivize token holders to stake their Fractal tokens in a pool that will act as first loss. So if there's a smart contract hack, we use that pool of capital to make users whole. And finally, once we reach a little bit more maturity, we are evaluating how to do kind of buy and burn mechanisms to, you know, so let's say we generate 8% yield. Our APR is 8%, so we pay out 8% yield, but we generate, say, 10.5%. You could imagine that half of that will just stay in the yield reserve as a security buffer, and then half of that will be used to buy and burn the token for you know, to pass that on back to token holders. There are regulatory constraints around that, so we're still evaluating. So don't take this as a promise. That's the general idea.
Cool. There have been, like you said, a lot of flaws and kind of negative publicity surrounding DeFi as of late, but there's also been a lot of success, and there's been a lot of innovation and a lot of positives that have come out of DeFi. And I'm curious to know, when you look at protocols like Aave, like Curve, like Convex, and any other protocol that you find to be successful, what are some lessons and key points that you've taken from those and you're applying to Fractal to make sure that it has a smooth and successful future?
Yeah, I think so obviously these are the DeFi OGs, right? I think people tend to forget how long it took for them to launch and really scale. They were founded, you know, in late 2017, 2018. They built for a good 1.5 to 2 years, and it took until the summer 2020 for them to, well, DeFi summer to blow up. And so the inspiration I take from them is to build slow. And, you know, thankfully, actually, we're in a bear market, so there's less of an expectations for us to, you know, reach a billion TDL in the next few weeks. So we'll take our time and be careful. And like the priority is don't lose people's money. And so focusing on security, focusing on user experience, and taking our time until the product is progressively matures.
Amen. Kelvin, I'm going to try to squeeze in some community questions here. Before I do, is there anything about Fractal that I haven't asked that you want to share with our community?
No, just join our Discord and give us feedback. Again, we're not trying to do a farm and dump, but we're trying to get users who are actually using the product for what it is and are going to stick around. And part of that is talking to users. So we're always keen to hear more feedback, criticisms, and how to make it better.
Right on. So Aisha has her hand up. Let's go with her. Aisha, there?
Yeah, thank you, Noah. So it's mentioned on your white paper that you have different strategy manager for each blockchain. You also discussed about it. I want to understand that will strategy manager be deploying predefined strategies on each blockchain, or will those strategies be created by the AI algorithm, or is these strategies only be selected by the AI algorithm?
So for now, we don't have external strategy managers. For now, all of our strategies have been built by either the core team or contributors, and they've been audited, and they are autonomous, so they're in a smart contract. We are considering in the future maybe doing.
Thanks, Noah. So you've made mention of Fractal.
Sorry about that.
No worries. Where was I? Yeah, so no external strategy managers for now. And when we do decide to do that, one, we'll get feedback from the community first, and two, they'll be audited, or there will be a couple of pairs of eyes on them. I'm not comfortable yet with the idea of an AI algorithm running arbitrary strategies on its own.
Okay, got it.
Right on. Well, Kelvin, that brings us to the end of the AMA. We're going to push out your socials and Discord and also the main Fractal website in our channel, in our main channel. I think that community members that have never experimented with yield farming or even borrowing and lending should have a look at Fractal. Just remember that everything you hear on Whalecoin Talk is for educational purposes only. We do not give any financial advice. We are here as a podium for you to come and learn about various crypto projects that are being built across the space. So always do your own research and invest what you're willing to lose. That was Kelvin from Fractal Protocol. Kelvin, again, before you leave, give us a quick summary for people that are just joining of who you are, what you're building, and your vision for Fractal in the future.
Yeah, so project lead for Fractal, we are building a simple cross-chain protocol to provide fixed yield for depositors, abstracting away the fact that there are many chains and many protocols to interface with, and also saving on gas, to essentially mint a yield-bearing stablecoin that can be reused across the space. We'll add more features as we go, lending, maybe fiat on and off ramps, and additional pools for wrap Bitcoin, Ethereum, etc. But for now, stable yield, paying 7 or 8%. You deposit and you can forget it.
Cheers, Kelvin. Well, best of luck to you and take care.
Thank you. Thanks for having me.